Hey guys, yeah. Sorry, that was a random mistake. I cut and paste the YouTube music playing in the background, and I was like, what is the new anti-streaming technology that picks up if I'm streaming a YouTube video and trying to stream on YouTube, that they'll play that video? I was like, what? No, that's too crazy. They can't do that because my my feed is giving the different picture. I'm like, oh, what's happening here? Luckily though, I was just looking through different. I wasn't speaking. I was just looking through different charts there on what was happening. So we haven't really started just yet. But a pretty interesting market. The last couple of days. What I'm looking at here is the resurgent US dollar and how to play it. Now, we talked about yesterday selling the 107. That's worked out on the euro. But the pair which is behaving a little bit strange and definitely giving some opportunities here is the pound. Now, the pound was also under pressure, broke that 124 level, that key support, and looked really weak when we were doing the update last night. Then we had this member of the Bank of England come out, Forbes, and say, look, inflation and growth continue to be strong. We're going to have to raise rates soon. Market loved that sort of talk, right? Because a fair bit of the reason that we pulled back from the big rally off 120 from May's speech, the big reason that we stalled here is the fact that the BOE was pretty neutral and didn't really talk about raising rates at all. And so people who have been pricing in rate hikes from the Bank of England had to price them out, right? Now, with the new little discussion here from Forbes, it's back on the table, and it's definitely probably going to outperform in a market where there's US dollar strength or US dollar weakness. And the best way to play it is to play it against the weakest pair out there, which is the euro. So I re-engaged the euro pound shorts. Pretty sure we're going to be testing the 84.80. I suspect we're going to break even lower than that, but we'll just see how it goes. It hasn't been exactly a completely reliable partner of the pound in the last couple of weeks, but definitely I want to see how it develops. The other trade that we have running is the dollar yen. Right now, so dollar yen we bought off that 111, and last night the market tested 112 again, bounced back above it, tested 112 again in Asia today. Now, the thing is, there isn't really a yield move to support the recovery in the dollar yen. Stocks are pretty strong, but there's not much else going on here, and we haven't been able to crack these previous highs. Now, if we can crack these previous highs above 112.60, then I really think we can get all the way back up to one of the 113.50 quite quickly. And that's what I was looking for today. At the start of the Asia session, failed, and then at the start of the European session, we've also had a little bit of selling here. So this wedging a little bit, right? This is pretty important today, for this whole rally, for this trade. We don't want to see this market break lower, below 112 now. Otherwise, it's very likely we're going back to test that 111.50, even lower. The market will just, traders will pull their the buy orders, and everyone will just wait for that lower level again to try and rebuy the dollar yen. It's so I'm hoping that this is the case, right, where we do find support here, but it's been a struggle, hasn't it? It's been a struggle with dollar yen picking these bottoms. It's just not working out too well. But given the reward, if the market does break higher and the potential for us to go back to 115, I do like to hold the long here just in case we hold. It's a very low data week, so can't expect too much US dollar inspiration from some third outside party. Trump is a little bit toned down so far, hasn't really been too aggressive either way on trade or anything. So yeah, there's opportunity here. Now, so short euro pound, long dollar yen. Long dollar yen's a bit more suspect than the short euro pound, but we'll see how we go. Stocks though remaining buoyant, and DAX sideways a little bit, not really that being able to hold gains either. DAX was actually a little underperformer given the euro sell-off. I thought it would do a lot better than it did. It hasn't been able to recapture the Dow movement. And the other pair that we're watching closely last night was the Aussie dollar at the 76.10. Held a few attempts, making it less fun. You know, we really like these supports to be broken, to give us a bit of a clear indication, get the market selling further. We didn't get that, so can't really look at that as an option now. Any of the Aussie dollar crosses can't really play on the downside. We just have to respect the Aussie dollar strength and what's happening there. It's disappointing for volatility when all those supports hold. But yeah, let's see how it develops today. I really think that the pound probably has the most potential to rally, and the dollar yen has a fairly strong chance here. So this would make the pound yen really the one to be watching. The pound yen has the opportunity now to extend gains, 100, 150 points, 200 points quite quickly. If you trade the pound yen before, you know how quickly it can move. And we'll be watching to see if this develops a little bit later today in Asia, as things, in Europe, as things heat up. We haven't got much movement on the pound just yet. It's still sort of struggling for direction. Dollar yen is also having its own little internal battle. So it's a pretty pivotal day for some of these pairs. If we're coming here tomorrow and dollar yen's 112 or 113 something, we can continue to be bullish on it. If the euro is breaking lower, we can continue to remain short, and then Aussie dollar will probably have a second test of that 76.10 in those scenarios. So we potentially could get some delayed reaction in the Aussie, just not so much yet. But euro pound really, I think it's quite a nice trade here. There is another Bank of England speaker up tonight. Once again, these guys are speaking when I'm sleeping. God. They're trying to cause some volatilities in these pairs I play. I'm not sure if Cunliffe is a bear or a hawk or a dove. I might be able to find out a little bit later. I'll read some. Well, we might be able to find together. Read a bit of research if there's any previews on it. I haven't looked into it just yet though. What FX Ram is saying inside the room is that that Forbes is a bit of a hawk. Now, yeah, okay, that's the case. Hawkers be hawks, but still, you could sense the market's almost looking for an excuse to buy the pound. The dip today was so shallow. Nothing here. Everything here screaming, keeping on extending. And if it doesn't extend, if the euro falls and it just holds its own ground, then the euro pound falls as well. So let's see, 85, 84, 10, 80, 84, 60, so 84, 80 is the level I'm a little bit suspect about the pair, but we'll see how it goes. Yeah, no direction on the Aussie there, unfortunately, Emilia, because we were looking at the potential here to be buying the Euro Aussie if the Aussie dollar broke through that. Well, we're going to look today. If the Aussie dollar had broken lower, we should have seen a spike back up towards like 141. Aussie dollar held, and now we're rolling over. It's actually could be on its way down to this 138 level. Been a while since we've been down here. But yeah, you're late to the party if you're selling Euro Aussie. Yeah, it's not the same as Euro Pound at all. Aussie can't be immune to US dollar strength forever. So yeah, dollar yen, pound yen, euro pound are the main pairs in play today, I believe. Fairly light week in certain data, so you can't really. Well, maybe it's nice if you're an oil trader, you can watch a bit of the crude oil inventories, but there's nothing really catching my attention apart from the price action. So we'll just be sticking to the charts today, seeing if we can get some clear direction. That would be the main way to be playing. I can't offer you more insight than that on today's particular trade. I'm actually, because I'm a big dollar yen trader, and I've got a fair bit of dollar yen on the bottom here across multiple accounts. I really want to see how it develops because there's scenarios today where I'll be buying more. It's we haven't been given the green light at all. Let's see. Yeah, well, it definitely caused a lot of selling there, FX RAM, and that helped Canadian dollar get sold aggressively too. So dollar CAD's uh, the weakest of the commodity currencies. No, I don't know. I wouldn't be playing oil. Oil. If you don't track oil well, I mean, you basically have to be an oil trader. You can't dibble and dabble like we do in Forex. You can't just go across to oil and say, hey, what's going on oil? I'm going to buy 50, or I'm going to sell 55. You really do have to study it. You have to learn the patterns, learn the players, learn what's important to be watching the news flow, and study the reactions to these oil inventory releases. I mean, I haven't been studying these oil inventory releases because one of them comes out pretty late in America, midnight Sydney time. The other one comes out at the end of the US session, the private report. So the time zone actually dictates a lot about what I trade. So I don't trade Canadian dollar much either because of the oil impact and because of the movement on of oil, the movement that Canadian dollar has from data releases in the US session. So Canadian dollar is the North American Aussie dollar. So I'm guessing a lot of Europeans and North Americans play it casually, and maybe they don't play the Aussies or the Kiwi. They might ignore the Kiwi because it's like, why are we trading Kiwi when you trade something a little bit more reliable like the Aussie? I can imagine you guys have the same sort of feeling towards the Kiwi. It seems like it's crazy. It is a hard one to trade if you don't track it. But we'll see. We'll see what happens there with oil tonight. Given the big falls that oil had overnight, then it is critical. It doesn't need more negative news. It doesn't need more stockpiling. Always could get some serious selling, and that would overflow. So pretty important day here for oil tonight. Then that will flow into some of the other pairs. I don't know if it would follow through that quickly. But if oil drops, you mean tonight or you mean just generally? I mean, if oil drops pretty quickly down to say low 40s, then yeah, the inflation pressures are going to be delayed. That would really take some of the pressure off the Fed, and perhaps would delay the US dollar story. Impact on stock markets have been pretty hard. There used to be a time when oil fell, stocks fell. That broke down a little bit in the last 6 months. If anything, lower oil could be seen as a boon to consumers and a delay to the Fed rate hike. So stocks could be well supported on that. So I wouldn't be trying to trade anything other than oil, from oil, maybe just Canadian dollar. But yeah, I mean, if it gets low enough, then you will start to see an impact. But a move to 50, 48, that would be nothing. Yeah, so if you're not trading, if you've not been watching what's going on in the trade room, see this massive new training competition. I'm actually coming pretty much last in it because I didn't understand how aggressive the rules were. I just went in there trying to make 100% in a month because it's a 1 month trading competition. I read the rules after the first little bit and I was like, what? Ooh, this is a very strict trading competition. So if you want to get involved in this, each month will be running. You need $1,000 in an IC account to do it. I've never seen a trading competition this tight before. I've never seen a trading competition where there isn't 250% return, 80% drawdown, wild standard deviation. The way it's calculated is you have your equity versus your worst drawdown versus your standard deviation times your standard deviation. Now this really rewards certain sort of trading, consistent trading, and there's nothing wrong with consistent trading. And it's geared a little bit towards finding a good trader for signal following. So I understand what Nick's set it up for, and it's actually bringing out some extremely consistent trading. Curvo FX is winning at the moment with a really good return given his drawdown. So yeah, definitely don't deposit and try and trade NFP, because you will. Yeah, that's not the sort of competition we're dealing with here. We're dealing with equity return as maybe a third of what you need to be focusing on. Obviously, it needs to be positive, but your drawdown has to be really light, really low, and your returns have to be pretty consistent. Yeah, so no losing 20%, making 100% on a trade sort of scenario. That just won't work out. That'll really hit your standard deviation, which is your percentages on each trade, and it will really hurt your drawdown when you eventually take a hit. So yeah, I think it is probably the best. So this is actually a fairly unique trading competition. It's more like a who can trade the safest. Alright, that's literally what we're dealing with here. The smoothest equity curve will be the best equity curve here. No madness. I'm gonna ramp up into a parabolic though, see if we can come in from the back. Yeah, no, I didn't even open a big trade, but it seems like it's the biggest trade anyone's opened on this trading competition, right? That was from the NFP that I opened some long dollar yens, and I think it was down 10%, but I didn't really care, and I was like, oh, well, that's game over. So next month I have to play a new style if I want to play it, which I think I might. It's a bit of fun. Get back in the little bit of healthy competition. I mean, it can't be too bad for you to trade consistently. It can't be too bad for you to be thinking about winning with a strict risk reward ratio. So yeah, I encourage you guys to sort of compete if you feel like a chance. If you're new to trading, it can only help. All right, and if you're aspiring signal provider, which I know many in the room are, then it's a chance to get on the radar. Yeah. And it's true. I mean, there's multi-million dollars worth of assets to be managed if you can come out on top. Alright, so that's enough of that, and let's have a look at some of the research here. We'll see what the banks are saying on the back of some of this movement. Actually, given tomorrow's Thursday, tomorrow morning we do have the RBNZ. Now, we haven't looked to this much. It's another one of those hold events. But if you're trading the Aussie Kiwi, which I know a lot of us have been looking into lately, let's have a little look. Economic data's been quite strong, but so has the Kiwi dollar. I doubt they're going to come across with a hawkish shift, but they haven't been known for competence, the RBNZ, and they have known to be a little bit ignorant of FX markets movements in the past. So the OIS is interbank interest market, right? So what you can see by looking out at the different dates in the future, you can see how long away it is before they're raising rates. Now, by the end of 2017, they're priced in a full rate hike. And that's sort of what the RBNZ will shift and impact. You know, very unlikely anything happens the first half of the year. It's how close we are to them raising rates that people are going to start to complain. Now, whether the Aussie Kiwi can move back towards parity for the first time ever, it really depended upon the RBNZ now, because the RBA came out with a neutral to slightly upbeat approach, and you know, it's the turn of the RBNZ to sort of try and up on that if we want to get some more selling in the Aussie Kiwi. It's proven a very stubborn little pair to break out of its ranges, and the ranges are compressing, so a big move is coming, whether it's down or up. RBNZ doesn't really shift towards raising a rate. Perhaps we do have the chance here for the Aussie dollar to really outperform the Kiwi, and we get that big move back towards that 110 level, which the difference in interest rates suggests we should be at. So this is pretty critical time here. The global dairy trade last night was relatively strong, but markets aren't really responding to that at the moment. So they're looking for the central bank's future scenarios to show an increase to 1.8 3 years ahead versus current 1.7, and they would say this is a little bit of a hawkish tilt. The very hawkish scenario is where it shifts. What, this is the 20% scenario. This result would give a 2-year swap rise by 10 basis points and the Kiwi dollar up by about 1%. And the dovish scenario is similar sort of unchanged track, future track, and concerns about the Kiwi dollar. But they suspect the markets will be skeptical and the Kiwi's not going too much lower than it. Alright. So yeah, I mean, definitely at the moment the New Zealand dollar is skewed towards the top side. Another thing to note that the inflation expectations were pretty strong the other day when the market shot higher. That's there in the background of traders, right? There's this underlying support for the Kiwi, and we did have a nice reversal. So did a lot of pairs, but it's really hard to keep the Kiwi down if it doesn't break key levels. So I would be going into this announcement a little bit hawkish myself, and it's been sort of pairing up for this too. So yeah, pretty interesting day for the Kiwi tomorrow morning. At the end of the US session, basically, is when it comes out. Local time 7 AM for me. So 10.5 hours from now. This is a little bit too crazy. You know what's causing a lot of mayhem for traders at the moment is the gold. Really is so hard to sell. So hard to sell. I mean, US dollar's been quite strong, right? Gold's just shooting higher. It's really surging on the back of uncertainty around the world growing, political risk growing, and the price action is just extremely bullish. So pretty dangerous to try and sell into that. Even if you get strong US dollar, it hasn't been responding. It's the same as a little bit similar to dollar yen, right? You haven't been getting that follow through. So yeah, it's going to be an interesting day. It is perhaps a little quiet, but you know, if we can get some new lows in some of these pairs, like the euro, if dollar yen can somehow muster the strength to break that 112.50, we could get a little bit of fireworks set up for tomorrow. Today, though, we are sitting at a pretty quiet open in Europe, unfortunately, and we don't have any news to sort of change that. So I'm not going to be too. I'm not going to spend too much time talking today. I can't really see what else to be discussing other than the euro pound short, which is my trade basically of the day, and that's really what I'll be tracking myself personally. So hopefully we have a little bit more action tomorrow. New Zealand dollar, we'll review what happens. Also we'll review how the dollar yen reacts, whether it breaks that 112 or goes back higher. If we're sitting here and it's at 112.30 and the market hasn't broken one way or the other, yeah, we're going to have to wait again. But I suspect we are going to pick one way. Euro yen. Euro yen. Euro yen is causing some trouble. People don't know the euro yen is such a big source of flow in the market. You know, in terms of flow, it competes against the pound. So there's actually huge amounts of orders going through on euro yen, and it is pretty important to watch. And sometimes it does hold the puzzle, the clue to the puzzle, right? Why is dollar yen going down when the euro is going down? It shouldn't happen like that. And only ever happens when the euro yen's really weak, and usually only ever happens when there's eurozone political risks. Yeah, and I think the market's responding a little bit to that. So that's the main way I'm trying to understand why this dollar yen hasn't broken higher, given the euro move yesterday. It's just getting taken out here on the euro yen. The euro yen was enjoying a little bit of a rally, right? It's broken 120. So keep an eye on euro yen. That could be the culprit here, dragging down the pound, so to dragging down the dollar yen. Yeah, well, Trump hasn't said anything just yet, but he's probably ramping up to say a few things. You know, what we haven't heard from Trump in the last 2 weeks is his outlook on his policy with China. So at some point that's going to be addressed, and that's the next big risk there, FX RAM, I believe. And that's, you know, the risk is skewed terribly to the negative there. So we'll see what it comes out, when it does come out, but, you know, right now, nothing too crazy there in the Trump lane. To be fair though, I haven't checked Twitter on Trump for a couple of hours. He's still focusing on the cabinet stuff. It's very presidential. It's kind of hilarious. Alright guys, yeah, so trade safe today. There isn't too much to play on. We'll update tomorrow how everything plays out. if there's no other questions, no other pairs you want me to look at, I'll finish up a little early tonight. There's no real bank reports I want to go through either. Alright.